All right, my friends, Barry Burns here with Top Dog Trading, and today I'm going to give you a little mini Forex trading classes about risk-reward ratios and how to plot them on your chart so that you can make some informed decisions before you take the trade and also for mapping your exits. So what we're going to do is we're going to use the Fibonacci extension tool. So I'm using NinjaTrader here, but pretty much every trading platform I know has this tool. Exactly which buttons you're going to click and so forth will vary from trading platform to trading platform. So I'll demonstrate it here in NinjaTrader 8, but feel free to check the support documents of your trading platform, maybe instructional videos that show you how to use their tool. So Fibonacci extensions. Let's say that our setup is that we've seen the market come down, come back up, retested this low, and for whatever reason we feel we want to buy here. I'm not going to go into the whole buy strategy. That's a separate topic. Whatever, you could use this with whatever trade setups you use. This is just about mapping reward levels on your chart. That's what this is about, regardless of whatever entry triggers and stops you're going to use. So let's say that we've got a good setup here and our trigger is going to be above that bar and our stop's going to be below that bar. So that's what we do. We start below it where our protective stop will be. So wherever your protective stop will be, you click there. Wherever your entry is, again, we'll put it right above that bar. Let's say it goes above there. Click once and actually click twice. Okay, and now it's on there. But we got a problem because we don't really want to measure those regular Fibonacci levels. We just want to measure the 100 increments, 100% increments. So what we're going to do is, at least on NinjaTrader, you go here to levels. That's where you can enter and edit the price levels. All right, so we can just remove these. We're going to keep 0 on there. We're going to keep 100, 200, and then we're going to add 300. And then we're going to add 400. And you'll see exactly, whoops, not 4,000. That'd be great. I'd love to get a 4,000 reward on it. But that's probably not going to happen. So anyway, we'll do 500. That's even pretty darn aggressive. And let's see. Yeah, let's put in negative 100. See what that does, just for giggles. Negative 100. And that should come up where our stop is. It does. Cool. All right. So again, our entry is, let me bring over my little handy dandy drawing tools here. These are pretty cool. Be very clear here. So we drew our Fibonacci extensions from there to there. So our entry is there. So you see how it says 0%? That's because we've made no money. So that's where we haven't made any, we haven't lost any. Okay, if we get stopped out, that's why I put negative 100%. We've lost 100% of the money in that trade. So that's why we put that. Now, 100%, that would be here. And so that means that now we've got, going back to risk-reward ratios, this is a 1-to-1 risk-reward ratio if we take profits here. So 1-to-1, not great, not optimal, not what we would prefer. We'd prefer to have a bigger reward than risk. But if it just goes to here and it came back down and stopped us out, we would make no money. Unless we put in a place trailing stop, then we might make some. But the target here, and by the way, and this is the thing, look at that level and see, is there any resistance? So these numbers are not resistance numbers. Let me be clear about that. These numbers are, the function of them at least for our purposes, is simply to tell us where our reward ratios are on the chart and compare that with previous swing highs and lows. So with this previous swing high, we may encounter some resistance there. And if we do, that's a 1-to-1 risk-reward ratio trade. Okay, now if we get up to here, here's our next highs. So if we get up to this level, now it's between 200 and 300. So we don't quite have a one, let me draw it this way, from there to there. We don't quite have a 1 to 3 risk-reward ratio, a little bit less. So you got to ask yourself, well, am I willing to take that trade knowing that I'd have maybe about a 1 to 2 2/3 risk-reward ratio? Okay, is that good enough? Of course, it can always go beyond these levels, and it does. And it turns out to be almost, I mean, if you held it to the very last pip, almost a 1 to 4 risk-reward ratio trade, which is pretty dang good, right? Anything 1 to 3 or above, we're whistling Dixie, and we're skipping down the hallways of Goldman Sachs. Well, maybe not, but anyway, so that's pretty good. Now, here's the other thing. Do not expect that the market's always going to go to those levels exactly. Because, again, these are not really meant to be support resistance levels or targets. This just shows you where your big number rewards, again, we're really just using it for what's the ratio, 1 to 1. Right, let me put this on here. So if we get stopped out, okay, that's our full stop out. If it gets up here, okay, we've got a 1 to 1 risk reward ratio. If we get up here, we've got a 2 to 1 risk reward ratio. If we get up here, 3 to 1 risk reward ratio. Up here, 4 to 1 risk reward ratio. So before you get into the trade, then you look at, like I said, previous highs or other types of support resistance you might use. Maybe you actually use actual Fibonacci numbers or whatever, floor trader pivots, etc. And then you determine, okay, is this worth the trade? Is this a good risk-reward ratio trade going in? And then you would also, by the way, don't just look at resistance levels above, look at the strength of the market. Is there momentum? Because remember, what causes the market to go through resistance levels? Strength, strong buying, big volume, velocity of orders, institutional orders coming through. So if you see that, just because there's resistance there, it does not mean that the market's going to stop there. So if the market's moving up in weakness and there's not a lot of strength behind this, then yeah, that might be it. But if there's a lot of momentum behind the market, then you could anticipate that it would break at least one resistance level and maybe go to the next. All right, so a little tool there for you to actually plot in your charts so that before you take a trade, especially with daily charts, like this is a daily chart, so you got all the time in the world to plot these and determine whether the chart structure and any indicators that you have, volume, the price bar patterns, all of that, look like it would give you a good risk-reward ratio trade. Also, by the way, another key thing in this is timing your entries. So the timing of this low, for example, in this particular case is very, very key. You want to make sure that that's going to be a final cycle low so that the market does go up right after this time. And I'm really good at timing entries. I've got a great market timing indicator. Be happy to share with you. Just go to indicatorwebinar.com and I've got a webinar where I'll walk you through that, get the indicator set up on your chart, and absolutely no charge. That's something I offer the trading community for free. I'll give you a 1-hour tutorial on it even. And another thing I'd love to give you is my rubber band trade. So I want you to get making some money right away. So if you'd like my rubber band trade, just go to rubberbandtrade.com and fill out the little form there. You just tell us which market you're trading. That's all there is to it. That's all there is on the form, actually. And we give you 5 videos. Again, it's a nice Forex trading class. Actually, it applies also to stocks, commodities, futures, whatever you trade. And in that, I give you a full trade strategy, entries, exits, everything you need to know. And hey, go get that trade strategy, start making some money right away.